Hey, what's going on? Oh my gosh, we've been in Thailand now, what,
Coming
10
up
days?
on 10 days now.
It's been absolutely insane. So grateful for our company, The Alliance. We've traveled more in the last 7 years than we have previous to that.
So grateful for The Alliance, just everything it's allowed us to do, not only for ourselves, but our kids. We're about to go hang out with the elephants. Let's go.
We are here in James Bond Island. We just took a canoe ride. It's a beautiful day. It's been raining all week, and it didn't rain today. So it was a perfect day to be out on a boat, surrounded by great people. It's been absolutely amazing.
We are in Thailand right now and having the best time. Let me tell you one thing, you have got to qualify for these trips. So we go to Portugal next year. Make sure you are there.
Today was a dream come true for me. Elephants are my favorite animal, and the Alliance took us to an elephant sanctuary where we got to bathe the elephants, make their food, feed them. It was just an incredible opportunity.
Questions, don't be scared, and get to it.
If you're brand new here, it is not impossible to make one of these trips. It's going to take some work, but it's totally worth it.
Have fun, we make money, and we make a difference. Alive.
From Phuket to Chiang Mai, Thailand, this is what happens when hard work turns into unforgettable memories. Thailand gave us the views, but the people gave us the memories. Don't miss another Alliance trip.
Welcome to the Wednesday Call Live. Now let's hear from our special guest host, Gina Hawks.
Well, hello, everyone. Welcome to the Wednesday call. I am Gina Hawks, and just very, very excited to be here today and to host today's call along with two special guests that I have. We have a great call for you today. Everybody is excited and fired up after family reunion. We had an incredible time in Burlington, just getting the family together, learning and associating, and we're all just ready to rock and roll and get fired up and going this week after family reunion. But for those of you who don't know me, my name is Gina Hawks. I am the national trainer for the Alliance and do multiple different things here at the Alliance, but my main responsibility is training. And just thank you, Andy Albright, for this opportunity, not only to host the call today, but just the opportunity to be part of this amazing team. I say this all the time. I thank God every single day that I get to do something that I love with people that I love. And just excited to share today and to talk to you guys and go over what we have to go over today. I've been with the Alliance for 15 years, travel the country, get to see a lot of you guys all over the country at our hotspots. Many of you have seen me in your computer screen. I always say, yeah, I'm the lady in the computer. I am not AI. I am real. I do exist. I know I'm in your computer right now, but come to a hotspot near you and you'll see me in person. But want to get into just some recognition, first of all, and to remind you guys of some contests that we have going. We have a lot of contests going on right now. Andy announced some. He gave some teasers on some of the calls leading up to Family Reunion. He announced them and went over some details at Family Reunion. You can find all the contest information on ARC under resources and contests, but we have the Builders contest going on, and that is for additional extra bonus points for Portugal. So everyone wants to go to Portugal on an all expense paid amazing trip to Portugal. So this is just another way to earn bonus points by doing what we do: sell, recruit, and build. And this one is particularly on the third of the one thing we do, and that's building. So you get points, 1 point for fast tracking an agent, 2 points for that agent getting licensed and contracted with a carrier, 3 points when they submit an application, and 4 points once that application becomes issued pay. The agent with the most points is going to get a bunch of points. I've got it up here. I've got multiple things up here to, to share with you guys. But the number one agent in the building contest will get 250,000 points to Portugal. So that's in addition to all the points that you're getting for attending conferences, for going out there and building your business, for selling, for teaching other people to sell. 250,000 points for number one, 220,000 points for number two in the building contest. It goes all the way down to number 15, and they will get 10,000 bonus points towards Portugal in the building contest. So you can get all the details. I don't have time to go into all the details on the call today, but make sure you're looking at this, you're talking to your leaders and going out there and talking to people and building things in the alliance so that you can be part of that contest. Also, Mutual of Omaha is running a contest, and they announced this at Family Reunion. So it started day after Family Reunion. One new agent and one veteran agent is going to win a trip to Portugal, which is crazy, in like 90 days. The contest started July 24th. It ends October 15th, right before National Boot Camp. So basically in 90 days, you could win a trip, all expenses paid, to Portugal. The new agent has to have a minimum issue pay premium of $15,000 and at least 5 applications. New being you contracted it sometime in this year, 2026. The veteran agent, someone who contracted prior to this year, has to have a minimum annual premium of $20,000 and at least 8 paid cases. So one veteran and one brand new agent is going to win an all expense paid trip to Portugal, thanks to Mutual of Omaha. We also have contests going on with ITS. Integrated Trust System has some contests going on. We've got contests with Excel testing. There's a ton of contests. I know Mutual is doing another contest. NLG is doing a contest for a trip to Dallas and dinners at Integrity Club, and just all kinds of cool contests going on. Speaking of Portugal, we have some new winners, new qualifiers. I don't want to say winners. You don't win this trip, you earn it. And we have some new people who have earned Portugal. We have 3 new people that have earned the extension. So congratulations to Jerry and Cassie Burbage for earning the extension. They'd already earned the basic trip. Amanda Maldonado for earning the extension, and Adam Burge for earning the extension. Congratulations to the 3 of you. And we have some new earners of the trip. That's Joe and Tawny Walker, Jared and Rachel Doucette, Vinny Napoli, Sebastian and LaQuinta Chambers, Brandon Manley, Mike and Noelle Leventovich, Spencer and Meredith Albright, Jake and Belle Krause, and Brandon and Jennifer Beals. Congratulations to all of the Portugal earners. We are super proud of you, all that you're doing. And we know each week we're just going to add more and more names to these Portugal earners, especially with all the contests going on. So today we are going to talk about specifically single premium whole life. We have a new, well, not a new product, but a revamped, we'll call it a revamped product with American Amicable that we are very excited about. Andy got excited. He heard about this product and he got excited. And when Andy Albright gets excited about a product, then that means big things are happening, Darren. So I have on the call with me today, Chris Norris, who runs Integrity Advisory Services, better known as BAM, who's going to be on talking to us about how we can use these products in the estate planning realm. And I have Darren Siva from American Amicable on the line with us today, and he's going to be going over the product examples of how agents have helped clients with these products. So we're going to talk about what is this product, what is single premium, how do we use it, the estate planning opportunities that you have, some sales ideas, how to position the product. If you have questions, put them in the chat. We'll try to get to questions. You can certainly text Chris or I as well if you have questions. We'll try to get to those as well. Actually, I don't think you can put them in the chat, but just text Chris or I and we can cover the questions. But with that, I want to turn it over to Darren with American Amicable. And he is going to start us off by talking about some of the product specifics and just some details about the product. So with no further ado, Darren, I am going to turn it over to you, and you should be able to go ahead and share your screen.
Okay, good. Hey, thank you, Gina. Everybody, welcome. Whether it's in the afternoon or morning, still your time, welcome. Thank you for letting me be here. Hopefully you can see my opening screen at this point. Yes, last month, or earlier this last month, Andy and I were together on a really fun trip, and I introduced this Legacy Builder product, which is our single premium whole life, and he did get excited, and I'll share with you why I think there should be excitement about it here in just a minute. First of all, I want to congratulate everybody that's qualified for the trip next year. That's incredible. And that's fantastic. All the different contests, those are amazing. So way to go, everybody. Super excited for you. Very quickly, a little bit about myself. I've been with American Amicable, or AMAM, for 40 years. I literally hit my 40-year mark last month. And so I've been on the sales side of our operation since 1990. So I feel like I have some experience, and I know what I'm talking about. Hopefully, this will come out in our discussions. And as you all know, we have final expense, we have term, we now have indexed universal life. Many of you have heard about it. We've done some training. You may not know me. You may be more familiar with Pete Mejia or Jonathan Garza. We're all part of the same sales team. Let me share the story about Legacy Builder and why I think it's so exciting. And this is the story I shared with Andy. Go back literally 22 years ago, and we had an IMO relationship with a specific organization that actually targeted the single premium whole life market. So for me, it was the first exposure to this kind of product. It's not a hard product to understand, and we'll go through the mechanics of it here in just a bit. But we built this product specifically for this one organization. We were expecting X amount of sales. Okay. We weren't expecting really any more than that. But after we introduced the product, rolled it out, what happened literally in weeks, if not just the first few months, is the product created a lot of excitement, and we picked up a lot of additional sales throughout our entire distribution system. So I know that the product competes well in our space. Our space is simplified issue. Everything we sell is simplified issue. I used to say a simple application. On the old days with a paper application, it would be one page front and back. It's not easy to sell. Our job is to make things easier once you make the sale, to get the policy issued, to get you paid, to do all those things and all those things well and right. This product fits that model. It's got a decision engine built in. We'll talk about that here in just a second. And it's a very quick turnaround, very quick issue rate, very quick pay rate. So all the things that we all need as agents that we count on, this product will deliver. Let me just get into the product itself and start with the next slide. Why would you or I or any of us want to sell single premium whole life? It's a good question. And when? When is a good time? When would it be a fit? So I want to touch on that. Chris probably has some ideas as well that he can share. But I'll tell you this, when any time and every time that you come across a client, and I know you all do a good job of this, of asking about what's going on with the families you help, seeing where they have monies here and there, seeing if there's ways to reallocate, do this or that. This product is a good fit when you come across people that have assets set aside that are not for the spouse, so they're non-spousal. A great example is an individual you come across. Maybe they're a final expense client. You thought they were a final expense client. You find out two things. One, they're very healthy. And two, they've got literally, say, $50,000 sitting in a certificate of deposit, a bank CD. And they tell you, you ask them, what's this money for? And they tell you, well, it's for my 2 grandchildren. When I pass away, I want them both to get $25,000 apiece. So when you have clients that have monies set aside that they're not planning on using for their children, for their grandchildren, for some future event, this product's legacy builder could be an ideal fit. And I'll show you an example or two. Again, anytime you find safe monies parked somewhere conservatively, this is something to think about. And I'll show you, in my opinion, why. The biggest reason is the $50,000, if you roll it into a single premium whole life plan, it's going to virtually double that amount, give or take a little bit. And the beauty of life insurance in general is it's income tax free, passes on to the family, bypasses probate. So all those other nice benefits, and it's whole life insurance, and it's competitive whole life insurance. And I'll give you some examples here in just a moment. Just like any other whole life insurance policy, the death benefit is permanent. It's not going to change. It's a lump sum premium. It buys a lump sum amount of death benefit. It's never going to change. It's going to have cash value growth inherent in the plan. Because you're putting a large amount of money into the policy as a lump sum payment, it's going to generate significant cash value starting right away. And that's important because if and when the client decides if something happens in their situation and they need access to the money, well, the money is available and it grows quickly and they can take the money out in 2 or 3 different ways. So there's options for that if and when that becomes an issue, a challenge, a problem. And again, the beauty of this product with us is because it's on a simplified issue platform, the process is simple. It's not easy to sell, but the process of getting this product approved and through the door, out the door to your client, that part is significantly, it's not complicated, it's easy. So hopefully that makes sense to you. All right, just some basic mechanics of the plan. Who can you sell it to? What are the age ranges? What are the face amount limits? All that kind of stuff. So this product is literally sold from the age of 45 up through the age of 80. So you're already in a sector where you deal with clients. I used to refer as old, but I'm in this category. So I'll just say older, more mature clients, okay? Ideal fit. And again, a lot of your clients that are traditional final expense clients, they may not qualify for this because of health issues, but those that are healthy, this product is a great fit for them as well. There's preferred and standard. The standard is your tobacco rate. On non-tobacco, you have both standard and preferred. If you dissect this product and say, well, how easy is it to qualify? It's relatively easy as long as you roll out all the big stuff, okay? A heart attack, in recent times, cancer, stroke, all this stuff that you could issue final expense, maybe not issue something else. If you can rule those out, this product can basically get approved and issued. It's got up to 6 tables of standard underwriting built in. Well, what does that mean, Darren? Great question. Standard underwriting table 6. I'm probably a good example. I know I am a good example. I'm not the slimmest guy in the world. I'm chunky. I've got high blood pressure. I've got osteoarthritis in both my shoulders. I take a cholesterol medication. I still am within 4 tables. So I could qualify for preferred. Let's say I was a little bit over on my build, I could still qualify for standard because of the 6 tables of underwriting that you build into the process. So generally speaking, the folks that you would identify that have these monies that would benefit them to roll it into a single premium whole life plan, generally speaking, they're going to qualify. As long as you rule out all the big significant stuff that you're already familiar with the term plans you sell and final expense plans that you sell. Everything on this product is fully commissionable. It has very competitive commissions. And you're going to ask me, well, Darren, what's the commission? And I'm going to tell you to talk to Gina, to Chris, to Andy. They'll tell you about it. But I'm going to tell you out in the market, when you price this thing, when you look at it, when you compare it to other companies, it's extremely competitive. You're going to have to trust me for now, but it's very, very good. You're going to like the compensation structure, I promise. Getting back to the underwriting, you can see at the bottom of the slide, there's 3 bullet points. All right, the first 5 questions on the application, if it's a yes answer, it's a knockout, not going to be approved. But those are the really significant, bad, dread things like, are you in the hospital? Are you on an oxygen tank? So the bulk of your clients, again, are going to be able to get past those questions. And no matter what the rest of the answers are, we can issue the plan. Okay. If everything's answered no, it's preferred. If some of the questions beyond the knockouts are yes, we can still issue it standard. So nice way of building in the process so that you can be assured that we can get the bulk of these cases issued for you. All right. So if you look at recent products that we've introduced, and we're just following the trends that are out in the marketplace today. Anything and everything that we have rolled out for the past few years is going to always include living benefits, because living benefits are very nice. This one has 2. The standard terminal illness rider, which every carrier has today. And the concept behind that is, okay, I have a policy, it's in force, I have protection, I am diagnosed with a life-ending illness or disease. Well, once that occurs, we'll pay up to the full face amount to the client while they're still alive. Don't have to, but if it's a value to them, be happy to do it. And the mindset is for us and every carrier out there is nobody's going to lapse a policy that's in force once they find out they've got a life-ending illness. So we know we're going to pay it. We don't mind giving it out front as a living benefit. The other rider is somewhat unique. We're probably not the only carrier, but there's not a whole lot of carriers that have a confined care living benefit. And I want to touch on it very briefly. Once this policy is in force, 30 days or longer, no matter what else happens, if the insured is admitted into a full-time nursing facility, regardless of the situation, we will start to pay out a percentage of the death benefit monthly. It's, I believe it's 2.5% of the face amount, never to be more than $1,500 a monthly benefit. And it'll continue to pay that out for as long as the person is living. And at whatever time that person passes away, then it will, whatever lump sum amount is available after the fact, it'll pay that to the beneficiary. Again, you don't have to use this benefit, but it's an option, and it helps the family, especially the beneficiaries and the people taking care of the insured. It helps them with making choices and options about how and when and what to do with the monies that are available. So very, very nice benefit. No extra cost for any of this. It's built in as a part of the structure. And the last point, there's only 2, and my opinion, there's two reasons why somebody is admitted into a full-time nursing facility. One is they're recovering from surgery and it's short term. The second reason, which is the predominant situation, is there's something going on with their health and they're not going to come out of the nursing facility alive. So not a nice thing to talk about, but really a good thing to understand how these benefits can create additional comfort barriers and safety for the families that you all sell, that we all protect. Okay. Now, this last rider, it's also a no cost rider, and I want to touch on it because it is very unique. I don't know that you're going to see this particular benefit on any other policy that other companies sell. We have this benefit available on 2 or 3 of our whole life plans, and I knew the actuary years ago that developed this concept, and it was a brilliant idea. I'd like to give most of the ideas we get on our products, we learn from our competition, what's out there on the street. This benefit absolutely came from a guy that is your typical actuary, that if you looked at him, he looked like an actuary. He was he was a nuclear physicist in his degree, so he's very smart. But he came up with this idea, and here's how this works. Okay, you have this policy, legacy builder. You have this benefit. When the death occurs, the beneficiary has 3 choices. One, they can just take the proceeds in a lump sum, which a lot of times is the case. The second one is the beneficiary guaranteed insurability rider. What that does, it says, hey, say the husband passes away, and we're talking to the spouse. Your husband had a $50,000 policy or a $98,000 policy. We're going to give you the option to buy up to that same face amount, no matter what your health status is. So there is 0 evidence of insurability. And that's a big thing to understand and to know about this benefit, because that's huge when you're looking at, say, somebody that at that point the spouse has significant health issues and maybe could not qualify for traditional life insurance, maybe could not qualify for anything except guaranteed issue whole life. Well, this plan, any permanent plan of insurance we have, will make available up to the face amount that the husband had. No questions asked, on the spot. And then the last option is they could take a combination of some of the death benefit paid out in cash and use some of the death benefit to buy their own paid up life insurance policy. So some really nice features, and I like to point out, because it does add some opportunities for all of us when we're out there with our clients, whether it's virtually over the phone, face to face, on a Zoom, whatever. It's a nice benefit to have in your toolkit to bring out, help you close some cells, help you not only close, but solidify the cell, where if somebody came in behind you after the fact and tried to replace or do something with this plan, it's a harder thing to do. Another point, since this is single premium whole life, which not a lot of companies necessarily have that kind of product, it's harder to replace just because of the nature of the sale and the commitment of a large lump sum of money put into the plan with a paid up life insurance policy. So a lot of the things we have concerns about with term and IUL and final expense, that would be opportunities for other people to try to do something with our in-force cases. It's harder to do with this. I won't say it never happens, but it doesn't happen very often. So a lot of nice benefits with this product and this plan. All right. Show me how this thing works. Here's my best example. Let's got a client. Let's say you sold them an IUL policy. And they tell you, well, I've got $50,000 sitting in a CD. Okay, what do you want to do with that money? Well, I've got it parked for both my grandkids. They're going to each get half when I pass away. I've got a money market, $30,000 sitting in it, and I've got some investments with worth about $50,000. So all in assets, $130,000 in assets. If we as agents trying to help these families out, if we said, hey, what if we just took the $50,000 you have set aside for your grandbabies? What if we could basically double that benefit for you? Still there if you need it, but provide each one of them close to $50,000 of benefit. Would that be okay? That's the sell. It's literally that simple an approach. And in this situation, a 65-year-old female non-tobacco preferred buys almost $100,000 of paid up life insurance, just under $96,000. So you don't quite double, but you almost double the benefit. And again, all the traditional aspects of life insurance, income tax free, bypass probate, all that stuff applies. And you've just grown their asset base from $130,000 to almost $176,000. Just by repositioning monies that they already had, that they identified for you. It's a win for everyone. And when you win as the representative, as the agent, when the customer client wins by increasing the benefit, and we win by getting policyholders, nobody loses in that scenario. So it's just a wonderful benefit. And again, that's the beauty of this product. So I share all that and go back to when I first started. So we rolled this product out 22, 23 years ago. At that time, truly, I was clueless about how single premium whole life works. The entity that we built it for, they sold a lot of annuities. So they already had thousands upon tens of thousands of clients, and they were working their existing clients that had annuities, because in the process of selling annuities, they would find these situations where clients had other money set aside, clearly identified, not something they were going to need, but something for somebody in their family or for the future, for their church, whatever. And this is where that fit. And so that's when it clicked with me, like, okay, I get it. And I feel like I know I'm preaching to the choir. There are lots of opportunities like that. All right, so we rolled this product out to this one organization. They took off, wrote a lot of it, and almost as an afterthought, which is kind of embarrassing for me, we decided, let's just make it available to everybody. And again, you wake up a year later and the sales outside of that one organization were significantly more than we got more business than we ever dreamed of. And it's because of the design of this product. From every aspect is competitive. And again, I like to use the analogy of a three-legged stool. To be able to sit firmly, you need three legs. It's got to be good for the client. It's got to be good for you. It's got to be good for the company. And when you build something where it's level, it's solid, then it's going to work. And this product is exactly that scenario. Okay. So I'm repeating myself. It's a really good product. It's one that you can be very proud of. You're going to love the compensation. You may not even know how the compensation works. That's okay as you learn. And if you compare it, you're going to find this one is right there at the top, if not the very top. All right, how can you get payments in? Two ways. You could just get a lump sum amount of money, send it in via check, whatever, or you can do a 1035 exchange. And Chris, you could probably expand more on this. There are other situations as you're doing a full financial review for your clients where you're going to have assets and monies in different places. And this is an example where assets could be transferred via a 1035 exchange as well. So you really have two opportunities as far how do they pay for it? How do you fund it? Again, you're going to come across multiple situations where your clients have monies parked away, conservatively set aside for somebody in their family for the future. That's one. And then you're going to have situations where you can reposition assets if it works and if it's in the best interest of your customer. And there will be times where you'll see that. All right. So I'm going to back up. And I've already spent a fair amount of time. I think I'll save the Par Whole Life for another session, Gina, because we can open this up and do the next piece, ask questions, whatever. That's the end of my spiel. Hopefully you can see by the passion, I'm a believer in this product. It's really good. I'm supposed to tell you that. Take a leap of faith. Some of you go out and try selling one or two or three or four of these, and then let's get the word out and it's already happening. As we introduce this to various entities, the sales seem to just start taking off. So we're hopeful and confident this should be the case with the Alliance, with you all.
Awesome. Thank you, Darren. I appreciate that. And I think you have some more examples to show us later as we kind of look at different ways that agents have positioned this product and used it with their clients. But hopefully you're starting to see there is definitely a place for this product out in the market. And I think those of you that are taking advantage of the estate planning opportunity that we have here at the Alliance, we've been doing that about 3 years now from the very beginning. So if you've not taken advantage of that opportunity, you're missing the boat. So get on the boat and start learning more about the estate planning. Chris and his team and ITS just do a phenomenal job of putting resources on the university, having training calls every single week to help you better learn the estate planning process and everything involved in that. But Chris, I'm going to turn over to you now to kind of talk a little bit about how to position these products when it comes to estate planning and how our agents can use this in the estate planning realm.
Yeah, perfect. Thank you, Gina. Thank you, Darren. We appreciate that. Let me introduce myself because I think most of you have met me. Again, my name is Chris Norris. I run Integrity Advisory Solutions. That is BAM. People ask me all the time, how did we get BAM from IAS? And we used to be Burlington Alliance Capital Management, so we abbreviated it. If I abbreviate IAS, there's a couple things I can say, but nobody really, it might not be nice if we say that on stage. So we opted to keep it as BAM. So our role has been to help you guys write more annuity business. We took off, or took over, the estate planning side. So I want to talk about, positioning. I want to talk about the things from an estate plan standpoint that I think this revolves around, right? So estate planning is about protecting an estate, right? You're putting everything in the right orders. Life insurance can help create an estate, right? Because everybody that's doing estate planning, we don't always get a client that's got $2 million, right? Sometimes we get a client that's got, just like Darren's example, they got $50,000 in a CD and they've got $30,000 in money market and another $50,000 in securities, so they get $150,000. Nothing wrong with that, but maybe the client's trying to figure out a way to create an estate, which is what Darren was exactly talking about, right? They took $50,000, we doubled that, so now we've doubled their estate, but we also are tax efficient. So I'm going to talk about the things from an estate plan standpoint in what you guys hear in the seminars, right? When I start meeting with clients on the financial review, the top 3 things that I think we hear are we want some type of tax mitigation strategy, right? Everybody's got qualified money or they've got CD. They're trying to figure out how do we minimize tax. I'm going to talk about maybe how that fixes or fits in. Second thing that I think we talk about that I hear is they're concerned about outliving their money. Right, I would say that is 99% of people tell me that. And then the third one is legacy, right? All the things that they have, they want to make sure they leave that behind. So when we start talking in these, let's talk about tax mitigation strategies. I'm going to use Darren's example because I thought it was really good. And we have a client that tells us that, they're concerned about paying more in income tax. They're concerned about IRMA. They're concerned about all these things. And we see that they have, $800,000 sitting in CDs, right? So, and that's an example, or $100,000. The problem with $800,000 sitting in CDs, it's not the fact that, yes, we're not keeping up with inflation most likely, but they're conservative investors. We're good with that, but they also get a 1099 on that money every year. So we're increasing their income burden just because of the vehicle that's built in. So again, if I've done my questions on the front end and I know that this money is legacy money, they don't really have to have it, they don't need it to survive on, maybe we can start positioning that and say, hey, well, if I could show you a way to eliminate the 1099 and the tax burden that you have on this money, would you be interested in finding more about that? Right, so I'm gonna start setting myself up with that. Kind of the legacy question, and also the tax question. The second question is, hey, if you don't mind me asking, I know you told me you didn't need this money, you want to leave it behind. If you don't mind me asking, would you rather leave your kids $1 or $2? Right, because in Darren's example, right, I know that if I dump in $100,000 and I can get standard to preferred, I'm almost going to double that money overnight. right? So again, I'm going to start positioning myself and asking questions to say, hey, let's see if we can show them a way, get them interested. What I'm looking for, kind of like Darren said, we're looking for a way to help the client. We're also looking for the client to give us feedback that, yeah, I think I'm interested in something like that. So this product positions us to realistically do that. IULs are great. The problem with that is we can't dump in a lump sum. People don't always want to pay a premium in retirement, right? Everybody's on a fixed income. We hear that all the time. If I can show them a way to reallocate some of the funds that they've already done, right, and get more benefit from that, that's a lot more attractive to clients as opposed to taking on a premium. So I think that's a really great place for that. So from a tax standpoint, I think that's great. Outliving income, again, we can borrow from the money, we can do different things like that. I am more concerned, because I didn't mention it. I said legacy, but really there's a fourth one that's probably third and fourth. The third and fourth one are probably long-term care and legacy together, right? Clients are concerned about health care during retirement. If you looked at the product, right, it's got a built-in ADL or nursing home rider, I would call it, right? It's not long-term care. I want to be very clear, right? That's not what it's designed to do, but it can help provide a benefit, right? So if we have clients that are concerned about that, this is a way that we can do it. Guys, if you weren't paying attention either, one of the other things was the settlement options, right? If you have a client that, let's use our $50,000 example, it became $100,000, right? If we have a client that passes away and then they hit the option for an unhealthy spouse to buy up to additional benefits within that, they can keep $50,000. They can take their original purchase and then figure out a dollar amount from the death benefits going to go there. So again, it just provides so much flexibility with settlement options, because maybe in that case we take that $50,000 back and we use that for income for the next 5 years, because again, they've lost income from a spouse when they pass. I just think the flexibility of being able to show something like that. I didn't ask Darren this question. I will, and I put him on the spot. Is that a commissionable avenue if we do a settlement option, or
yes?
How does that? Okay, so I figured it was, but I was going to ask a question.
Fully commissionable.
Okay, yeah, you don't ever ask that. Attorneys, they say they don't ask the questions, they don't know the answer to it. That one I didn't quite know, but I figured that's what it was. So again, you're setting yourself up. You're doing the right thing for the client. Hey, and by the way, you're going to get paid to do it. So to me, I think that's, I think that's phenomenal. So again, in the estate planning side, we talk taxes, we talk legacy, we talk created estate, we talk long-term care, but even tax, we talked about all these different ideas. Hey, can we take $100,000, $200,000, double that money to help pay the tax or the offset on these Roth conversions, right? We talk about Roth conversions all the time. The challenge with a Roth conversion is talking somebody into spend $100,000 now, or $200,000 today, that taxes, they can see it, but they're not feeling it. Well, in this scenario, maybe we leverage the claims paying ability of AmAm, right? And say, hey, let's take this money over here that you didn't really need. Let's take $200,000. Let's get $300,000 to $400,000 to death benefit, whatever that number may be, and maybe that can help pay some of the tax on this $500,000. Because again, I would tell us, we run into that all day long. Clients that have $500,000 in a 401k, $1 million in a 401k, they're trying to figure out how to pay the tax. Our job is to show them options. Conversions are great options. Annuities are great option. Maybe leveraging a life insurance contract for a client is a great option too. We want to show them all the options. We win because no matter what they choose, we have a solution for that. So our job is to provide solutions. Our job is to educate. The last area that I think that we see in the estate plan market where I think this is going to be beneficial is we run into clients all the time. Darren talked about it as well, but they've got these old life insurance policies they've been paying for years. They've accumulated large cash value. Jared Doucette and I had a conversation the other day. This guy's got a large value. We were trying to figure out what to do. This is a position, right? You can 1035 that old money that's sitting there that he's still paying premiums on, which is what he's trying to avoid. Maybe we can show them a way to, hey, if we could if we could reallocate the monies that you've already spent and get you to a position where you have a paid up policy and we don't pay premiums anymore, how would you feel about that? Again, we're trying to find creative ways to help the client maybe reduce their monthly expenses, which is one case we were doing here, but also put them in a position moving forward that really we're helping them and future generations from an estate plan side. So again, I just think there's lots of different areas that we can help within that. I mean, again, we'll, helping grandchildren. I mean, again, I think the key with everything that I heard is we have to ask questions, right? We have to have a very good understanding of what our clients' goals are, where we can help them the most, and try to figure out and where the assets are. That's the nice thing in the estate planning. If you haven't gotten into that, make sure you reach out to our team. Caitlin Lewis is really leading the estate planning out of the office. You can email her at estateplanning@NAA-Leads. She'll reach out to you. She'll give you some ideas on how to get started or all the directions. But the reason I talk about the estate planning is, when you implement a trust through ITS, you get to see all of the client's assets. So again, asking all those questions, as far as what they're trying to accomplish, it's really easy when we know what they have. I think that's a challenge that we run into just in the individual sales processes. Clients don't always tell us the truth. They don't trust us right away, which is fine. Trust has to be earned. In the estate plan market, they have to fund their estate plan. They have to show us the assets. So we have a leg up, from that standpoint. You see everything. So again, then you can pick and choose and say, well, yeah, this product certainly fits because I see that they have these CDs. They've told me they want to have a legacy. This money's leave behind money. So again, it just opens those doors from that standpoint. But again, reach out to us. We'll be glad to help. Gina, Darren, I'll turn it back over again. I've got some questions. It looks like maybe coming in. I'll repeat those. But Gina, I'll kind of turn it over to you and Darren, and maybe we can go through the examples. I know Darren had some more as well.
Yeah, definitely. Thanks, Chris. You and your team do such an amazing job helping everyone when it comes to the estate planning and how to help those clients with different products depending on what the client's needs are. Darren, I'm going to turn it back over to you because, again, we want to go over some real world examples of how this product has been used by agents to give everyone and just more ideas of how you can position this product and how you can help clients. So I'm going to turn it back over to you, Darren.
Okay. And Darren, as you get started, I did have a question. You're probably going to go through this. When you go through kind of the parameters, what is there a maximum? Is there an age? Like the question I got, and you can answer this was probably easier. I don't know that we can give the specifics. 65-year-old client, healthy. They have $400,000 they're talking about exchanging. You can show them where to go on the website to get that information, but kind of what's the ideal client? Maybe you can tell us the ages and what we're looking for as well.
Okay, well, the ages is easy. Anybody 45 and older up to age 80. And the other prerequisites that are relatively healthy. So you do have to think about your typical final expense client. Some of those will not qualify, but we all know as agents, and I suspect already when you have a client that you thought was maybe a final expense lead, and then you get in front of them, talk to them, you realize, well, wow, they're very healthy. This isn't my typical final expense person. I can get them something better. I can get them a better whole life policy or a better term or an IUL. This is the fit for that type of client, okay? And yeah, I could go back literally and look at several policies and call the agent and say, hey, how'd you get this sale? Which is what I did when I first started reintroducing this product several weeks back. But it's always the same. It's always the same story. I'll give you the last one I talked about. A guy out of Houston, Texas. First name is Nick. He just submitted a case about 4 weeks ago, and he called me, something unrelated. and I always have a habit of looking at the agent e-file and see what they're selling. And he had just submitted this legacy builder case. And I said, Nick, I said, I see you just rolled, it was like 60 something $1,000, a lump sum single premium. And I said, tell me about that case. He said, what do you mean? I said, well, how'd you get the lead? How did this happen? And it's really, I mean, the answer to your question is it's going to vary just depending on each one of us when we're in front of our clients and what their story is. But this was the story for Nick. He said, Darren, I had a social media lead. And he does a lot of his own lead generation. He uses a couple lead vendors. By the way, before I forget, big ticket item. If nothing you recall about this webinar today, let this stick. Only use approved lead vendors, approved by Integrity, approved by the Alliance, and within the United States. If you are using any lead source outside the United States, you are at risk. I'm not trying to be an alarmist, but you as agents are at risk. Stay away from it. Run from it. Do not get involved in it. Nothing but bad things. I'm sorry I had to make my little home office pitch. All right. So I asked Nick. I said, Nick, dude, I saw where you just wrote like 63,000. Tell me the story. He said, okay. He said, Darren, you know, I do my own social media lead. Yeah. He said, I got a Facebook hit the other day. And I said, okay. He said, but this was not the typical response. And I said, what do you mean? He said, well, it was a lady, divorced, wanted insurance on her kids. I said, okay. And he was looking at our Par Whole Life, and I'd love to do another session on it for you all because it's an exciting product as well. But he said, the more I talked to her, he said, she told me, I want to buy permanent whole life insurance. And he said, he asked her, why do you say that? And he said her answer, and it didn't make total sense, but he said her answer was, well, I've done some research and I know term is cheaper, but I really like having something that isn't never going to change. It's not ever going to change. And I really like something that I don't have to pay for all the time. So he said he pivoted off the Par Whole Life because that's an ongoing monthly payment. And he said, I just asked her, he said, well, how much you covered you tried to get and how much money do you have? and she said, well, I want to get as much as I can. And I have about $100,000. And he said, where's it at? She said, it's some savings account at my bank. And he said, okay. He said, let me get some information. Let me run a couple quotes. I'll get back to you. When he called her back, she said, hey, I don't want to spend all 100,000 of that. And he said, okay. She said, but I do want to get like $100 to $150,000 of whole life insurance. So he said he ran a quote and he ran it for like 125. He split the difference and it was the 67,000 and change. He said, this is what you need. And he said, I wasn't really expecting anything. She said, okay. So he said, he wrote the case, e-app, mobile app. She said, how do I pay for it? He said, you got to send in a check. She said, no problem. Send in the check. So that's the best, most recent real world example that I have. And I know if I talk to 10 different agents about, hey, how'd you get this lead? How'd you get this? It's going to vary. It's probably going to be triggered by a lead, probably most times. Or if it's not triggered by a lead, it's already an existing client that you have, that we have a relationship with, that we know about, that kind of scenario. Maybe a referral, but more than likely one of those two scenarios. All right. So that's kind of my story about how do you get the sale, or give me some real world examples. What I want to do that I didn't think to talk about a second ago is I want to run an illustration, just because one of the biggest questions, and I should have touched on it earlier, and bear with me as I run an illustration, is like how much money is available and when's available. Because the probably the biggest hurdle, the main obstacle, the biggest objection is, what if I need that money? What if something happens to me next month, next year, 2 years, and I need that money? Which is a really good, fair question to ask, right? I don't think I'm going to need it. I'm not planning on using it. My grandbabies, I want them to have it, but what if? So I'm looking at an illustration, that same scenario I talked about earlier, a female non-tobacco preferred, age 65, $50,000 lump sum benefit, just under $96,000 of paid up life insurance. At the end of the first year, there's $39,000 and change available. So you put in 50, that first year you can have up to $39,000 of it back. So the risk is you could lose $11,000. Look at it that way. At the end of 5 years, $45,000 of the $50,000 is available, and at the end of the 8th year, $50,000 is available. So you really are running an 8-year track of where if you really need the money, you maybe don't get it all, but you'll get a big, fair chunk of it. So I share that with you to understand that the one probably biggest hurdle is, what if I need the money? You can, and we have a withdrawal provision every year up to 10%, no penalty. If you withdraw more than that, you can. We charge a one-time $125 to take out the money. You can do partial surrenders, take some of the money out, keep some of the death benefit. You can take out loan. So access to the monies can be handled in a variety of ways. The main so what for everybody is, if they really need the money, you can handle that relatively easily. It's there. Takes a few years, you have it all, but if you need any of it during the first X number of years, you can have access to most of it. That makes sense? Then the other thing I forgot to share is my little story. When we budgeted, we have to budget every year by product, how many sales how many policies we think we're going to have. And I remember way back then, we budgeted, I think, 5,000 policies. We thought, okay, in the first full 12 months, we think we'll sell 5,000 policies of this legacy builder. Well, we sold over 12,000. And the reason is, again, is we were just banking on one distribution. A whole lot of our distributors, our field partners, loved it, started selling it. We sold it for years. Huge success. Then the market environment changed. Interest rates went down. And several years back, we had to do a negative change of this plan. And we could either just pull the product, make it more expensive. What we chose to do was reduce the compensation, which basically killed the sales. Well, fast forward to a couple of years ago, interest rate environment has totally changed. Market's up, interest rates are up, there's spread, everything our owners need. So we reprice it, we revamp it, we add more comp, little bit of premium, not much, and we made it even better, which is why I am truly excited and will tell you all, give this plan a shot when you have clients that it's a fit. It isn't going to let you down. It isn't going to disappoint you, your clients. I promise you. Give us a shot. So that's the rest of my story, so to speak.
Okay, awesome. Thank you. Yeah, and I had agents just last week at Family Reunion asking me about single premium. Do we have companies that have single premium whole life? So I definitely think it is something out there that maybe more people are learning about or hearing about, and just different ways that we can position this product. We've talked about the estate planning, but you don't have to be doing estate planning. You've got clients that have needs for this product in other areas. I suggest you do the estate planning, but if you're not there yet, don't write it off as, oh, this is not something I can help clients with. Darren, as you were talking about the access to the cash in the policy, that's great. Those seem like, just compared to other products, those seem like very lenient guidelines as far as accessing the cash in the product. Usually with single premium whole life, you're kind of stressing, you don't need this money, do you? You don't need this money, do you? You don't need this money, which is still the main goal.
Yeah, you still should do that, but yes.
Yeah,
but it's
absolutely.
Good to know it's available if you need it.
Yes, this is not the product for, I want to put a bunch of cash in here and access it quickly. It is not the product for that. But if there's an emergency, having access to the money, it seems very access friendly. But I also want to point out the living benefits that you talked about, because a lot of times when it comes to clients that have this chunk of money, maybe setting in the bank or wherever, they have it earmarked for their grandkids or, leave behind money. But their big question is, what if I go into a nursing home? What if I need care? Then I might need to access this money that I have sitting in the CD or whatever in case I need care. But if they put the money into this product, the cool thing is, with the example you gave earlier of the 65-year-old female, 50,000 turns into over 98,000. They don't have access to just the 50,000 that they would have had in their bank account, in their CD, if they went into a nursing home. Now they have access through the living benefits to part of the 98,000. So it's a great way to overcome that objection of, well, I would do this, but if I go into a nursing home or if I need care in the future, I'm going to need access to this money. You have a great comeback of, that's awesome. If you put the money in this product, you're not going to have access to the 50,000. You're going to have access to part of 98,000. So I think that's a huge feature also on these products.
Yeah, I agree. Chris, you made a reference to this as well. And that's a great example. And I think many of us will nod their head yes, that have had parents, other family members that have gone into a nursing facility. If you've been through that, my heart goes out. I've been through it, understand. But think about this. And I misquoted. The nursing home benefit will pay up to $2,500 a month, not $1,500. So that's a nice chunk. What's that? Close to $30,000 in a year that you can access each month to help pay for the nursing care. Because Lord knows it is expensive. Anybody involved, you already know what it's thousands of dollars a month. Think about the family. Let's say the kids that are dealing with their aging parent that's losing their health, maybe losing their mind, maybe both. You can do a combination of things. You can start taking out the monthly benefit. Something comes up, you need $7,000 to do X for their parent. Do a partial withdrawal. Take $7,000 worth out. Keep taking the monthly benefit. So yes, the flexibility, it is a very nice additional support element to have in your arsenal of tools to help the families out. And again, when this product is sold, and if it's sold correctly and the clients truly understand, they're not going to let it go. It'd be a drastic situation before they let this policy go, in my opinion. It's very sticky business. It stays on the books.
Yeah, I agree for sure. Chris, I don't know if you have any other questions that have come in, but anything else on the estate planning side as far as positioning this?
Yeah, I was looking back, so I did get a couple of questions. Darren, I'll ask you again. You said issue age was 45 to 80.
40 through 80.
40 through 80. All right. So the question I got was
45. I'm sorry. I told you 45 to 80. Sorry.
Well, the question I got was on children doing it.
Yes.
They need to do it on the parent, because if they're 40, right, they're not going to have like a grandchild which is what I was asking. But we can still do it on the grandmother, and honestly, that's probably a better scenario because she keeps control of the assets and they get a tax-free benefit.
Well, and Chris, what's interesting? Let's say there's kids or even grandchildren or great grandchildren, even, because as we know, our clients, yes, their kids are important, but once there's grandbabies, forget about the kids. It's grandbabies. Yeah. We've got another product. It's not single premium whole life, but it's a great product for younger age, especially children. And I would love at some point to do a training session on it. It's called the Financial Lifeline, and it's whole life insurance with a very unique built-in annuity rider that pays a really competitive interest rate. It's a no-load annuity, a lot of neat advantages. And that would be a great product to tack on for the children if they say, well, I want something like this for my kids or my grandkids. So we've got an answer for that as well.
Yep, and I think that's perfect, because one of the things that I saw, when you're trying to like Gina said, when we're looking at the estate planning and kind of our clientele, right? We all went through COVID, right? We all experienced that. Unfortunately, what that did was accelerate benefits passing from one generation to the next. So when I look at this whole life, like Gina was saying, we're seeing clients, that are in their 50s and 60s that their parents are passing away. They don't really need the money from the inherited funds, but they're concerned about long-term care, or they're concerned they want to leave stuff to the grandkids. So again, those two products in combination can accomplish, the long-term care coverage that they need, that leaves more money for the grandchildren, because again, they didn't really need it, and the financial lifeline that you were talking about. I think that's a way to fund and use the funds that their parents gave to them as well. So again, those are the things I see. If I was looking for clients, Darren mentioned this, most they're either going to come from a lead or an existing client. If I was going back to my client base, I'd look at clients that bought annuities, right?
100%.
Those are clients that have assets. I would look for that. I would look at clients that are recently retired or about to retire, right? Because a lot of those clients not only have qualified funds, but they'll have non-qualified assets that the company's allowed them to do. So again, I would be looking at those, and they've got a need for insurance, right? They're getting ready to lose their benefits there, so maybe that's a place we can get. I'd look at people that sold a business or sold land, right? We get that all the time, that, hey, I've got this asset over here, I'm going to sell it. What do I do with the proceeds from that? I don't really need it, but what do I do with the proceeds? So I'd be looking for that. I mentioned receiving an inheritance. That I think is phenomenal, because we're seeing more and more of that. And for guys in the estate plan market, you guys are going to have clients that pass away. So this is not only today, but this is kind of moving in the future. How do we help clients? Again, large cash balances and CDs that are maturing. I would make sure that, on the estate plan side, I think it's easier. We have their funding documents. You can create spreadsheets. I know Amanda Maldonado and Veray created a spreadsheet. If you don't have that, reach out to us. We can get that. But it's a place to list the client's assets. It's a place to list it today so that you see it, but it's a place to track it moving forward. It has... Darren, the reason I said I like to introduce myself, and I was glad that you did it, was I've been in the business since 1996. You said you went into the sales on that side in 1990. Usually when I raise my hand or have people raise my hand, there's nobody else that's been longer. So Darren, I appreciate you sharing that. It makes me feel better. But when I started, we called it like a tickler file. Something I would go to that said, hey, this month, I know I've got clients that have CDs coming out. It's all technology now. It's all spreadsheets and that. But you need to be tracking that stuff. So these are clients, when they have CDs coming due, you can show them alternatives. Yes. I think that's... timing is a big part of this industry. Just because you presented a client last week or a month ago or last year, you presented them a product, the timing may not have been right. Right timing may be right this year, because maybe their parents passed away and they see the need that, hey, we are mortal, or maybe they received an inheritance. Again, making sure we're doing the annual reviews that we should be doing anyway, in getting back in front of those clients.
Yeah.
Not to hit the compliance bug, but Gina's on the call, so I'm definitely going to say it. But again, we believe in it. Guys, you got to do annual reviews. That's what you get paid commissions for to begin with.
Chris, let me jump in. I'm glad you said that. And I want to say this from the depths of my heart to everybody, especially I sold insurance with Allstate before I worked with AmAm. So, I've been there, done that a little bit. And especially for newer, younger agents, or you just new as an agent to this industry, I think it's a natural thing where we just I'm in my little box. I got this lead. I want to make this sell. If we can open our minds up and here's a box, make that box this big, because a natural assumption is they don't have any money. They may be living in a trailer home. And you may be thinking, well, they don't have any money. I'll be lucky if I can get a $50 a month, $75 a month final expense sale. Don't do that. Talk to them, explore, do annual reviews, because I promise you're going to find lots of people that have lots of money that are never shared if you don't ask. And don't assume anything, because there are a lot of people that squirrel away tuck away, put away monies that you would never even start to think they would unless and until you ask. Don't be afraid to ask.
Yep, absolutely. Don't prejudge. I was trying to pull a picture of one of the biggest cases I was ever involved in to show you the house, and you guys would have run away. Just because, but we start talking with these clients, and they end up pulling cash out of, books and all that. I mean, it was, I think they had $800,000 of cash in the house. I mean, you just, again, don't prejudge because you don't know. I mean, so absolutely, Darren, I think that is a key. And the reason I talk about annual reviews is you just don't know what's happened in that past year, right? Think about what's happened in the past year in your life, and think about that times, the 30 clients or 40 clients you see every week. I mean, again, you will find opportunity by asking. That was the biggest thing. You just ask. You talked about your agent selling a $67,000 single premium. He quoted it because that's what this client asked. He didn't expect to get it, but hey, if you don't ask and if you don't shoot your shot, so to speak, with the basketball analogy, you don't make the basket.
Yes.
So, but yeah, so Gina, that's what I see. I mean, again, I would keep the conversation simple as well. Learn some questions. I like, hey, would you rather leave them $1 or $2?
Yeah.
To me, that's a really simple question. Clients can kind of face that. There are more that are out there. Ask. Focus on client goals. I mean, again, if you've ever had a conversation with me, I know with Gina, what's your goal? What do you need this money to do for you? Darren said at the very beginning, by asking goal-oriented questions and what you're trying to accomplish, they're going to tell you what they need. So start with that. Lead with legacy, right? Talk legacy. What do you want to leave behind? Don't talk life insurance, right? Life insurance is the tool that does it after we know what they're trying to lead. If you've ever listened or seen Gina's IUL presentation, Gina puts it really good that, hey, we go all the way through this presentation and we don't talk about life insurance till the end because that's just the vehicle that lets us do all these different things. It's the same thing here. You talk legacy, talk what your goals are. Again, estate planning is complicated, but it doesn't have to be. It's only as complicated as the words that we use as we're walking through it. So that would be some of the things that I look at, and I would kind of, from an advice standpoint, kind of share with you.
Awesome. Yeah, I love that. Don't lead with product. Lead with your client's goals. I say this all the time, and coming from the product person, nobody wants to buy product. Half the time, they don't even know what it is that they're buying. They know it's life insurance. They should know, as the compliance person, they should know it's life insurance. But I mean, honestly, half the time, they don't know what company it is. They don't know exactly what kind of product it is. They just know it's going to meet their goals. That's what they care about. And that's not just true of this product, it's true of everything. But don't lead with product. People don't want to buy product. They want a solution to their problems. And how do we find their problems? We ask them a lot of questions and try to figure out what their goals are. And if it is, leaving money behind and things like that, leaving a legacy, tax planning, all those things that Chris talked about, this could be an awesome product to look at as a way to solve their problems. Darren, I don't know we've got a few minutes. I don't know if we did have a question about the loan rate. Do you know what the loan rate is on
I believe it's 7.4%. I think.
Okay.
Maybe a little bit off, but it's right around there.
Okay, and that's right in line with what we see from other carriers.
You don't necessarily even have to pay the loan. The client doesn't necessarily have to pay the loan back. I think most agents know this. The interest needs to be paid the interest charge needs to be paid every year, and if they don't pay, we can take it out of the cash value anyway. So again, another piece of the flexibility about how can I get the money if I need it.
Yeah, absolutely. I know you had some information on your other Par Whole Life product. So maybe we take a few minutes, since we've got a few minutes, and talk a little bit about it is kind of used in the same circles, but it is a totally different type of need and different type of sale. But maybe we talk just a little bit about the Par Whole Life product that you guys have as well.
Yes, and I'll throw this out as a teaser, and please let me come back and give me 20 minutes to talk about it another time. Our product is called Security Solution, and it is a participating whole life insurance policy. Well, what does that mean? Whole life insurance is either non-participating or participating. If it's participating, that means the company, the carrier, will share and give back any proceeds in excess of expectations from profit. Okay, that's my layman's definition of it. So if I have a participating whole life policy, then it can and it should and it normally will create dividends. And the dividend is just giving back some of the money, some of the profit back to the client. The uniqueness of our Par Whole Life, and it's, some of you may have heard the concept of infinite banking or be your own bank. It's a beautiful concept in the sense that if you can fund a way to build money, and instead of having to go to the bank and get a loan and pay interest to the bank, if you can do that yourself, then you're better off. And there are very definitive, defined, step-by-step procedures that you can do that. And there are some sales organizations that have built a whole sales concept just around this infinite banking idea. That was one of the driving factors in building this security solution out. And it wasn't the only, but it was one of them. And so with that in mind, you want to maximize the cash value buildup. You want the cash value to grow as much as it can starting from day one. Because the whole idea is, if you do this, and it's probably going to confuse people because it takes a 20-minute process to kind of get if you've never been through it. But if you can be your own bank through a life insurance policy, and you can build cash values in a significant way, and rather than go to the bank and take out a loan to buy a car, you just buy the car by taking the money out of your policy. You're going to keep the interest. You're going to save money, and you can always put the money back in, which you should and usually do. And this cash just keeps growing and growing. Our Par Whole Life has a paid up additions rider. We're one of a handful. Again, this is all simplified issue. So the whole process would work the same as with single premium whole life. The paid up additions rider, there's a cost, but it's relatively inexpensive. And so you can add as much PUA, paid up additions, into the plan. I may have $150, $200, $300 a month commitment. I might take $75 of that and just let it buy paid up additions riders. What does that do for me? It escalates the cash value buildup. And that's whole life insurance. It's permanent cash value, so it builds up the death benefit. So you're growing not only cash, but you're growing death benefit. And we'll take up to a $500,000 base amount. And I may start with a $500,000 policy, and 20 years from now, that may be worth $720,000 and has more and more and more cash value. I can take the money out, use it for whatever I want, put the money back in, let it re-escalate. That's my 4.5-minute version of this product. It's got great riders. It's got some additional living benefits that we don't have on the single premium whole life. It's got some really neat other features that, again, have me back, please, and give me like 25 minutes, and I'll do my security solution pitch on you.
Absolutely. That sounds like a great thing for the product call that we do every Thursday, is to talk about that. Well, just a few things. So again, that is a different product that is more for someone looking to build cash and access the cash, whereas the single premium whole life, I think Chris and both Darren said it, and it's what I always refer to as leave behind money. Generally, the money that you're putting in a single premium whole life is leave behind.
So And this will apply for most of our clients. If you have clients that you do some basic fact finding, you're trying to help them, and you discover that they're paying $2,700 a month towards credit card debt, and they have a mortgage of $2,500, and so they're already used to spending $5,000+ a month towards their home or towards paying off credit card. You can reposition how you handle that credit card debt through a participating whole life and shift and pay down that debt. That's part of the infinite banking concept. And that piece is what really helps. I don't want to say free up money, makes money available where you were paying it here, reallocate some of it, put it here, and let it work to help pay down those loans over time. And there's a specific strategy about how you do that. And I don't want to get into that today, but the whole process, when you fit it all together, it's like, wow. Okay, I get it. I can do that. And I know we all have not just clients, but families, our families as well, where this is a struggle, just paying off credit card bills and making sure I got a house to live in. So it can apply in many of your situations, your clients' situations. I promise you.
Yeah, absolutely. And that's the main thing is Chris mentioned it earlier. It's asking your clients questions. It's really trying to figure out what is the best way I can serve this client? What are their needs? How can we help with different products that we have to meet those needs? And we find that out by asking questions. So I do want to give you some statements, if you will, things that you can tell your clients if you have uncovered this could potentially be a single premium whole life client. Just some things that you can say to them. I know Chris gave some, but what if you tell somebody, hey, I've got an idea that may help you do more with your savings?
I think
very simple statement. Most clients are going to be open to talking about that. How about you've spent your entire lifetime building wealth? Now let's talk about preserving it. Again, can lead you into a discussion on this. And again, we talked about this earlier. It isn't about buying life insurance. It's about creating a larger legacy. Just like you said, Chris said, would you rather leave $1 or $2 to your kids, to your grandkids? And that's something with the single premium whole life. When you see the bump, maybe it's double, maybe it's not double, but who cares what the increase is? It's an increase. They're definitely going to have more to leave behind by putting it into the single premium whole life versus leaving it in a bank, leaving it in the CD, putting it, under the mattress or whatever. And it's life insurance, so it's 100% tax-free. So not only can you leave more money, leave a larger legacy, regardless of who you're leaving it to, but you can leave it 100% tax-free. Like, who would not want to do that? Just like you said earlier, Darren, it is a win-win-win for everyone in this situation when you find the right client for it. And I just want to give a personal story. My dad had a single premium whole life policy that he bought actually when he was relatively young. I think he was maybe in his 30s when he bought it, just as part of leaving a legacy. And Dad was 74 when he passed away. So from 30 to 74, that sucker grew. And it's just an example of he took, it wasn't a huge amount of money. He was in his 30s. He was starting his business, but he knew he wanted to leave something. At that point, both my sister and I had been born. So we had 2 kids, a wife, a business, and he was pre-planning. He was thinking, okay, well, I want to do something to be able to leave a legacy. So he bought a single premium whole life policy at an age that some people may think is younger, for most people to buy this. And then when he passed away, that policy had grown significantly. And so that was a 100% tax-free benefit that went to my mom. She was the beneficiary of the policy when he passed. And, we can never I'd give every penny I had to bring him back to this earth, but we can't do that. We can't change that, but you can change someone's financial future. And the other reason I'm bringing this up is when Mom realized she was going to be getting this benefit, several $100,000, and thankfully, thank God, she didn't need it. And Darren, her question to me was, I want to do what your dad did, and I want to leave this as a legacy. Can I just change the name on the policy to my name? And I was like, Mom, that's not really how life insurance works. You can't just, she, unlike me, has not done life insurance all her life. I was like, that's not exactly how this works. However, something that you mentioned earlier is that caveat that on your policy, they can actually do that.
Yes, you can. And you're not going to find that particular benefit. You can search. I have. You may find one, but it's rare. It's a very nice. It's a very nice plug for AMAM, for American Amicable.
Yeah. I mean, I know a lot of products. I don't know everything that's out there on the market, but I've not seen that as an option. I mean, that is huge. Thankfully, Mom was healthy. She used the money to buy another single premium whole life policy. But what if she hadn't been healthy? And that's what she wanted to do with the AMAM plan. She would have been able to do that because one of the options was, or if she wanted to take part of the money and leave part of it, that was one of your options as well. So I just want to tell a personal story that just talks about that option. And, it's not going to be every client that you run across, but you're going to run across those clients in that same scenario. And I just think that is an incredible option to be able to give the clients to be able to do that and not have to go through a medical exam.
Hey, it's a funny thing, Gina, and I don't know why I just thought of this. I mentioned way back earlier on that an actuary actually developed this concept for this beneficiary guaranteed insurability rider. His first name was Kerry. Brilliant guy. So any mathematicians out there, you've heard about the formula pi, P-I-I, the number 3.14, and if you do this and that, it'll do this and that. This guy, he also loved music, played the guitar, liked to compose music. He wrote a song and recorded it on a guitar and sung it, and everything about the music was developed off the concept of the formula for pi. And I just share that because his mind was so dramatically different and, really smart. But this is the guy that one day literally came down. I'll never forget it. Came down. I was our chief marketing officer at the time, came down to his office and said, "Hey, I got an idea. Nobody's ever done it. But what do you think if we had this rider that gives the beneficiary insurance no matter what?" And I thought, wow. So you share that story about. So it's funny how all these pieces years later kind of tie in together.
Yeah, absolutely. Did you say his name was Kerry?
Kerry was his first name, C-A-R-Y, Kerry.
That's my dad's name.
No, I didn't know
Spelled the exact same way.
Okay, well that's fate. That's fortuitous. That's amazing. That's too funny.
That's crazy. Yeah, like that butterfly effect, you never know that one little thing that changes everything. That's wild. I thought that's what you said. I did.
Kerry's his first name.
That's wild. Before we wrap up, Chris, was there anything else that you had, anything that maybe we forgot to mention?
No, I think, the keys that I think we mentioned were, ask lots of questions, trying to figure out what the goals are for your client. Reach out to Darren and his team. Obviously, they can help position this as well. Try not to overcomplicate it, guys. It's not. It's a big ticket sale, like Darren said earlier. So again, it's a big commitment. But again, if we use simplicity to try to explain it and we don't get overcomplicated, we have a shot. What happens is if we try to, I see new agents I talk about all the time, we get verbal diarrhea and we talk about all the things that probably don't matter to a client. Try not to do that, right? Watch the Bob Newhart. Don't do that. I mean, again, those are the things, from a sales standpoint, try to keep it simple. Again, goal-based selling, again, to me, I think that's the key. Whether you're in the estate plan market or you're in an individual side, all of those things equal the same, right? We have to do the same thing. So that would be kind of my input there, Gina.
Hey, and I'll email you both the product kits for both plans and a contact sheet for the whole sales team for anybody that needs to follow up and ask more specific stuff. We're available. That's why we're here for.
Yeah, and I just have to say, American Amicable, when it comes to not only excellent products, their service is second to none. You're talking to people that are in Waco, Texas, not some other country, and just phenomenal people. So if you've been one of those agents that haven't looked at American Amicable, not just for these products, but their final expense, their term, their new simplified issue IUL, just a phenomenal company and phenomenal service. I will say, Darren mentioned the commissions. You can find the commissions on the ARC. So if you go to ARC, you go to carrier, you go to American Amicable, there's a commission button on the carrier page. If you click on that, you'll be able to find the commissions for this product. And what I will tell you is that I know a lot of you, especially in the estate planning realm, have been selling annuities. And there are definitely places for annuities. I'm not saying that you sell this product in place of every annuity that you're selling, but you will be very pleasantly surprised when you look at the annuity or the commissions on this single premium whole life compared to an annuity. So similar concept of taking one lump sum of money, putting it into a product. When you find the client that this is a good fit and this works for what they're trying to accomplish and helps them meet their goals, then when you see the commissions, I promise you are going to be pleasantly surprised. But go to the ARC, go to carriers, go to the American Amicable carrier page. You can find all the commission information as well as additional product information. So if you want a little more details on some of the products, then go out to the ARC. The product guide is out there. If the contact sheet is not out there, as soon as Darren sends it to me, I'll get that posted as well. But we do have information on the ARC as well as the university if you want to get into a deeper dive on these products. If you're not contracted with American Amicable, now would be a great time to get contracted. So you can do that on the ARC as well. So just lots of resources out there. And like Chris said, Darren and his team there, his staff at the office in Waco are absolutely phenomenal. So definitely appreciate, Darren, your time. I know you are crazy busy with everything that you do with AMAM. And Chris, same. I know you are crazy busy as well. And I am getting ready to head to Orlando, Florida. If you know anyone in Orlando, Florida, we're doing a hotspot there tonight. Olga Mathis is going to be there, Marnie and Sabrina Frank, Danny Dana, Rachel and Jared Doucette. We're going to have all kinds of awesome people in Orlando tonight. So if you know anyone in Orlando, get them to the hotspot at 7 p.m. Thank you guys so much. I appreciate it. Thank you, everyone.
Thank you, Gina.
Thank you, guys.
Thank you all.
Yeah, have a great rest of your day.
You too. Thank you.